Hi everyone. So welcome to the stream today. Very much excited for having you. It's a new week and we are starting and continuing with our discussions towards the ICA November 2020 examination. It's always a privilege coming your way and answering your questions and also provide you with some assistance that you need in order for you to, most importantly, prepare for your examination and take your life to the next level. So welcome to the stream. When you join, give us a thumbs up on the video. You know how we do it already. So give us a thumbs up on the video. That way we get more engagement on the video. And together we can push the YouTube algorithm so that the video can reach as many students as possible. But most importantly, comment in the chat box any questions that you have for me. And also let me know what topics you would want me to teach. Don't give me subjects, but give me topics. So what topics would you want me to cover this week? What topics would you want me to look at this week? So comment in the chat box with any questions that you have for me and the topics that you want me to cover. And most importantly, consider to give us a thumbs up on the main video page. Give us a thumbs up on the main video page. That way we get more engagement on the video. So I see some chats coming in there. Augustine Amwatin, I see you. You are welcome to the stream. Lily Daily, I see you. Hi, I hope you're doing well. Christiana, I see you. I see you. You are welcome. Irene Mauli, I see you. You are welcome. Today we are looking at management accounting, introduction to management accounting. We'll be spending some time to look at the overview of the syllabus first. Then from there, we will look at the various terminologies that we need to understand. We will spend some time looking at our classification of costs and all of those things. So we are looking at the basics, the foundations of management accounting today to set us to be able to understand and do what we are doing very well. Nadia, Corey, I see you. You are welcome to the stream. Give us a thumbs up when you join the stream and also consider to share the video with your colleagues, friends, and the people who will be interested in lessons like this as we are talking about management accounting today. Then if you have any questions, also leave them in the chat box for me. I'm going to be reading all of your comments and also reply to them on the live stream as we continue with our discussion. So introduction to management accounting. Introduction to management accounting. Now, management accounting is one interesting subject that you need to look at. It's very simple to look at. It's very simple to pass, but it has a lot of aspects in it that you need to understand. Now, based on the ICA syllabus, the management accounting for the ICA level 2, there are a couple of things that you need to be looking out for, but I'm not going to go specifically to the syllabus or into the syllabus, but I've discussed that with you already on the syllabus structure for management accounting. In case you missed that, you can check out the how-to page on the channel and you'll be able to watch the video on how I broke down management accounting and the various things that you need to look out for. But today I'm going to be just telling you about the thematic areas of the syllabus. Then we begin our discussion in what it is that we need to do in order for us to start the journey. Seth Awiachi, I see you. You are welcome to the stream. Give us a thumbs up on the main video page as well. I see your thumbs up in the chat. Now, when it comes to management accounting, off the bat, there are a couple of key issues that you need to understand when it comes to the management accounting. Number one, issues about short-term decision making. Okay, so short-term decisions, very critical. Then long-term decisions. All right, critical. Next one, standard costing and variance analysis. And variance analysis. Then budgeting and budgetary control. Budgeting and budgetary control. And then the last one is performance measurement. So these are the broad areas that we need to look out for when it comes to dealing with what? Management accounting. Short-term decisions, long-term decisions, budgeting and budgetary control, performance measurement, and then standard costing and variance analysis. Now, let's break it down, okay? Let's break it down in relation to what we need to look out for. Now, when it comes to short-term decisions, this is where you're going to be covering a lot of things like make or buy, very critical aspect, cost, volume, profit analysis, or what we call break-even analysis, very critical aspect of the syllabus. Then we talk about relevant costing decision or relevant cost analysis, very critical aspect of the syllabus. Then you're going to be talking about issues like limiting factor analysis. All right. Then throughput accounting ratio. Throughput accounting, also a key area that you need to understand. Okay. Shutdown decisions. Okay. Shutdown decisions. All these guys are under the short-term decision making, and as we continue with our journey, we may be looking at some of them as we continue based on the requests you guys will make. So when it comes to the short-term decision, remember, in management accounting, when we are dealing with short-term decisions, primarily we're going to be using the marginal costing principle, which means that we're going to be determining what relevant costs are and what irrelevant costs are. So we're going to be looking at how we can make these various decisions. Make or buy. Do we make the product in-house, or we buy it, or we outsource? So in making that make or buy decision or shutdown decision, another thing that may come up is the thing in relation to pricing decisions or outsourcing decisions. That is also something that is, so pricing decision is also here, outsourcing decision is also here. So what factors do we take into consideration before outsourcing our in-house production or a product or service that we want to render to an outside supplier or an outside producer? What factors do we take into consideration? All these things are under short-term decision making, and you want to make sure that you understand these things very well before you go into the exam hall, because definitely the examiner is going to be throwing something at you when it comes to dealing with these areas. Limiting factor analysis, relevant cost analysis, shutdown decision, throughput accounting ratio, make or buy, cost volume profit analysis, or what we call break-even analysis. These are critical areas that you need to understand when it comes to dealing with short-term decisions. Now, in the long-term decision aspect, it's very simple. This is where we're talking about investment appraisal. All right. So here is just a one-liner thing that we're talking about, investment appraisal. Okay. So in the making of investment decisions, what are the factors we take into consideration? The capital, budgeting, processes, and all of that. That is going to be under the investment appraisal. Now here you're going to be looking at the methods of investment appraisal. Now, what are the methods of investment appraisal? We are going to be looking at things like the payback period, okay, the discounted payback period. We're going to be looking at the net present value, the internal rate of return, and then the accounting rate of return. So all these are methods that you're going to be looking at in the investment appraisal, right? So as a student, management accounting, going into the exam, or you've got to make sure that when it comes to investment appraisal, you understand these areas very well. Now, the examiner's favorite will always around the, remember the internal rate of return is also called the break-even rate, okay, because the internal rate of return is the rate at which the NPV of the project will be nil or zero. So another name for the internal rate of return is the break-even rate. So if you go to the exam hall and the examiner says, calculate the break-even rate, technically he's asking you to calculate what? The internal rate of return. So that is very critical that you need to understand. So payback period, how long it takes for us to get the initial capital outflow from the project. Then discounted payback, taking time value of money into consideration. The NPV, where we are discounting all the cash flows on the project into present terms. And then internal rate of return, I've spoken about that, then accounting rate of return. So when it comes to long-term decisions also, that is what you're going to be looking at. That's what you're going to be talking about. Not only that, then we come to standard costing and variance analysis, one of my personal favorite areas of the syllabus. standard costing and variance analysis. Here, you'll be looking at things like the types of standards that we need to look out for. We have the basic standard, the ideal standard, the current standard, those types of standards. You got to look at that. And then stages of standard costing, very, very critical area you need to look out for as well. Then we come to the various types of variances that we're going to be computing. So we have the basic variances and we have the advanced variances. So we have the material variance, the labor variance, the overhead variance, the sales variance, right? In the material variance, we can break it down into the material price variance, the material usage variance. Under the material price variance, it can further be broken down into the material price planning variance and the material price operational variance. Under the material usage variance, we can break that down into the material yield variance and then the material, what's the other one? Mixed variance, material yield variance, material mixed variance. So you've got to understand the breakdown of all of these items there under the material. Now, when we come to labor also, the same thing is going to happen. We're going to look at the labor rate variance, the labor efficiency variance. Then we're going to look at the ideal time variance as well when you are dealing with the direct labor variance in there. Then you come to the overhead variance, and there are a tall list of computations that can be made under the variances there, but you got to take into consideration whether we are dealing with for only one product of the company or we are dealing with more than one product of the company. So all these things very important when it comes to standard costing and variance analysis. Then one key thing also that you need to understand is the issue in relation to how you can prepare the operating statements and reconcile the actual profits with the variances that has been computed. That is also something that is critical here when it comes to standard costing and variance analysis. So as a student, you got to make sure that you understand the types of the standards, the stages of the standards, the various computations that can be made, the circumstances under which each of these computations can be made, and all of that. So that is standard costing and variance analysis. Now, immediately you finish with standard costing and variance analysis, because standard costing helps us in preparation of the budget. So we come to budgeting and budgetary control, a very critical area of the syllabus because of the fact that it's the fundamental role of the management accountant. The management accountant is there to, among other things, do two things: to control costs as well as to reduce cost of the organization. Now, remember, we will deal with these things in a moment. Cost control and then cost reduction, right? So cost control is ensuring that we are actually spending within the budgets given to us. So that is where we're going to be comparing the actual against the budgeted to find the variances. So when we are doing standard costing and variance analysis, what we're trying to do is to do like cost control in that case. Then there is also cost reduction. This is where we try to reduce costs to an acceptably low level without compromising with the quality of raw materials, quality of labor, and other factors in there. So once we're able to set the standards, we can now prepare the budget of the organization. And you want to understand the importance of budgeting, the stages of preparation of budget, then the various types of budgets that can be prepared. We start with the sales budget, we come to the production budget, we come to the material usage budget, we come to the material purchases budget, then we come to the labor budget, the labor hours budget, the labor cost budget, we go to the overheads budget. We now bring all of those things into the cash budget. Then after that, we can prepare the master budget, which is the budgeted income statement, and then the budgeted statement of financial position. So you need to understand it in the stages, in that step, in the process, in order for you to actually increase the chances of understanding it and ultimately passing the examination. So that is also the key thing we need to understand when it comes to budgeting and budgetary control. You've got to make sure that you master that area very well. Then the final aspect of the syllabus is the issue in relation to performance measurement. Performance measurement. This is quite a bulky area because there are a lot of things here that you're going to be talking about. How you can assess the performance of organizations using various modules like the balance scorecard, Kaplan and Norton's balance scorecard, or using the Fitzgerald's and Moon building block to assess the performance of the organization, dealing with issues about divisionalization, assessing divisions' performance using the return on capital employed, return on investment, residual income, and all of these things are going to be captured under performance evaluation or performance measurement. So it's also an area that you've got to be careful about. You've got to be ready for in the exam hall for the examiner to throw you some jabs there. So what are we saying here? Thematically, we're going to be having 1, 2, 3, 4, 5 segments of the syllabus that are very critical, that are very key, that you need to be able to study for, prepare for, to be able to increase your chances of ultimately passing the examination. And that is very critical, and I cannot overemphasize that. Okay, so I see some comments coming in there. Nana Atrem said, hi, how are you, please? Hi, Nana, I'm doing well, and I hope you are also doing well. Charles Bayamful said, great, all right. Then I see Sunday Abani said, hello. Hi, Sunday Abani. I see some of you guys joining. Give us a thumbs up on the video when you join. That way we get more engagement on the video, and YouTube will be able to push the video so we can reach as many students as possible. So smash the like button, let it turn blue if it hasn't turned blue and you are watching, and let's keep the message coming in. Now, put in the chat box what topics you want me to cover, any questions that you have for me. Put them in the chat box. I would want to answer your questions for you and also assist me to be able to plan our schedules out as we continue with our discussion. So these are the issues we need to look out for. But aside these, there are some minor things that you need to understand. The first one is ethics. Okay, management accounting now has a component of business ethics that you need to understand. And around last week, we mentioned or we discussed professional ethics is the same in management accounting. So in case you missed that lecture, you can go and watch that lecture. Last week, we discussed about that, accountants and ethics. We look at the fundamental codes of ethics, the threat to fundamental codes of ethics, and then the safeguards that can be to mitigate or eliminate those threats in that case. So it is something that you need to make sure you look out for, because it is in management accounting. Now, not only that, we also have some other modules that I've not mentioned here, things like total quality management, things like dealing with issue about just-in-time system. All these are modules used to evaluate an organization's performance. So all these are some of the things that you can add there in that case. So when it comes to management accounting, these are the things that you need to understand about it, right? So put it in the chat box for me. Let's see. Ishola Peter said, good day, sir. Hi, Ishola. I hope you're doing well. Ahmed Haruna said, hello. Hi, Haruna. Victor Mensa said, hello, sir. Keep the good work. Thank you. Victor Mensa said, please, can I have your contact? Yep, you can call or WhatsApp 050-114-9296. Let's see if I can put it here. 050-114-9296. 050-114-9296. If you are outside Ghana, you add +233 because +233 is the country code. So you call that. So Mensa Victor, that is the number 050-114-9296. And if you have any inquiry or you want to study under my mentorship for the ICA November 2020 examination, join our Zoom sessions, get access to the full lecture course and my ebooks and question banks. Then you can also reach us on that same line, WhatsApp or call 050-114-9296. Kwachi Isaac, I see you. You are welcome to the stream. Baba Baturo said, great work done. You are really making a lot of impact on many. God helps you a lot. God bless you as well. Baba Baturo, it's always my pleasure to help, assist, or help other students as well. Okay, so Victor Mensa said, thank you, sir. You are welcome, Victor. Right. So now that we've seen the overview and all of that from the syllabus, let's begin the discussion for today, all right? Let's look at introduction to management accounting, look at some key terminologies, some few things, blah, blah, blah. Then we will get into the discussion for the day. Now, most importantly, please comment in the chat box what topics you want me to cover on the channel. Any questions you have for me as well, drop them in the chat box. I'm reading all of your comments and will be replying to all of them. Then also make sure you follow me on Instagram because I post some content and meeting details as well there that you can get updates on and follow. All right, so let's get into the discussion for the day. Now, to be able to discuss management accounting and understand what it is about really well, we need to look at what we need to discuss. So we first want to look at the scope of management accounting. Okay? The scope of management accounting. Now, in looking at the scope of management accounting, we first want to start with the issue in relation to the difference between cost accounting and then management accounting. Now, you know, management accounting is a build-up of what? Cost accounting. So for those of you who did costing in high school or cost accounting in high school, it's a build-up. So you realize a lot of the things that will be in the management accounting, if you did cost accounting in the high school, that is, you didn't do elective maths and you did cost accounting in your high school, then you realize that many of the things will be what? Familiar, and it's like the same thing, but we are adding a couple of things in that case. So let's first discuss what cost accounting is. Then once we understand what cost accounting is, we can now build up on that with management accounting. Now, in a simple language, we say that cost accounting refers to the process of accounting for cost from the point at which expenditure is incurred or committed to the establishment of its ultimate relationship with the cost centers and cost units. Let me take that one liner again. Cost accounting refers to the process of accounting for cost from the point at which expenditure is incurred or committed to the establishment of its ultimate relationship with cost centers and cost units. Now, please note that 9 out of 10 of the discussions we're going to be doing will be coming from my book, okay? My book on management accounting will be coming from that book in that case. So a lot of the things we'll be talking about, we'll be discussing all the notes exclusively from my book in management accounting. Now, to put it simple, we will say that cost accounting refers to the process applied for the elements of cost. Okay, so how we incur cost, how we pay something, either for material, either for labor, how we track all of those things are what refers to as what? Cost accounting. Now, the first thing we need to look at is what is cost and what is cost accounting. So if I say, for instance, it cost me $200 from home to the office every day, what does that mean? So cost simply refers to the amount of expenditure incurred on an activity, a process, or an undertaking. Let's take that again. Cost refers to the amount of expenditure incurred on an activity, a process, or an undertaking. So the process involves in determination of the cost of something is what we refer to as what? Cost accounting. But the key thing we need to ask ourselves is, what are the objectives of cost accounting? So let's see. objectives of cost accounting. Basically, there are about 5 objectives of cost accounting that we need to look out for. Objective of cost accounting 5. Right, I see some of you guys joining. You are welcome to the stream. Give us a thumbs up on the video when you join. Give us a thumbs up. Give us a like on the video. That way we get more engagement on the video. And thank you very much. I see some of you hitting or smashing the like button. Thank you very much. So give us a thumbs up on the video. That way we get more engagement on the video and we will be able to reach as many students as possible, because that is what the YouTube algorithm wants. YouTube promotes videos that have a lot of engagement. So if you want us to reach as many students as possible, smash the like button and also comment in the chat box with any questions that you have. So objectives of cost accounting. 5 objectives of cost accounting you need to understand. Let's look at them one after the other. 1, cost ascertainment. All right. 2, cost control. 3, cost reduction. 4, fixation of selling price. 5, policy making. So these are basically the 5 objectives of cost accounting. We're going to take them one after the other and talk about them briefly. Okay? Now, when we say cost ascertainment, what are we talking about? Cost ascertainment simply refers to the determination of cost on an activity, a process, or an undertaking. Okay? So how much cost do we incur on something is what refers to as what? Cost ascertainment. So this is where we're going to be looking at issues about costing methods. Costing methods. So there are 2 things you need to understand. We have what we call costing methods and then costing techniques. So costing methods are the methods used in the determination of cost. So when we say cost ascertainment, it refers to the process involved in the determination of the cost of an activity, a process, or undertaking. So when it comes to cost ascertainment, if it is a job, that is where we're going to be looking at job costing, okay, batch costing, right, process costing, okay, service costing, all those guys. So the process involved in the determination of the cost for a job, for an activity, for a process, for a service, for an undertaking is what is referred to as what? Cost ascertainment. And the first objective, that is one of the key objectives of cost accounting, is to determine how much cost we are incurring on the job that we are undertaking or on the process that we are using to produce a product. Now, these things are cost methods, and we'll be looking at them sometime later on if we need to. We'll be looking at them sometime later on. Job costing, batch costing, process costing, service costing. These are all part of the fundamental issues you need to understand when it comes to management accounting. So that is cost ascertainment. That is cost ascertainment. Then the second thing there is cost control. Cost control. Now, cost control refers to the comparison of the process of comparing actual cost with budgeted or standard cost to determine the variance. Okay, comparing the actual cost against the standard or the budget to determine the variance. The purpose of cost control is to keep cost within what? The budget. So for instance, if we budget that we're going to be producing a product and the cost we're going to be incurring in producing that product is $5 per unit. So at the end of a period, or when we finish the production of the product, or as we are producing the product, we'll be measuring the cost. We'll be measuring the cost to see whether we are in line with what we said we would spend or not. Now, if you're not in line in what we said we would spend adversely, then decisions will be made quickly to decide what it is that we need to do. But the second thing of cost accounting is what? For cost control. But remember, to be able to control cost, we must set standards, okay? We must set standard. Then we collect the actual performance or the actual results. Then from there, we can now compare to determine whether we are spending within the budget or we are spending outside the budget. Then the third one is cost reduction. Now, I want you to be careful here. There is a vast difference between cost control and then cost reduction. There is a vast difference, and you got to make sure you understand them. Cost reduction is a process of, so let's take the standard one-liner definition. This refers to the real and permanent reduction in the unit cost of goods or service rendered without affecting the intended use. So let's take that again. Cost reduction refers to the real and permanent reduction in the unit cost of goods manufactured or services rendered without affecting the intended use. What does that mean? It means that cost reduction, it's a process, okay? Something that we do, something that we put in place in order to reduce the unit cost of the product. However, whatever decision that we are making, we must make sure that we are not affecting the intended use or the quality of the product. Now, you got to be careful here. So, for instance, let's say we are producing a product. What can we produce? Let's say we manufacturing this duster, right? We manufacturing this duster. So, if you are manufacturing this duster, what do we need? Probably we need wood, we need carpet, we need glue, we need a carpenter to do it, or whoever it is that is supposed to do this. And I think these are the things we need, right? So cost control is, as we are making the duster, we've budgeted that we want to spend $5 each duster because we could sell it for $10 and make a $5 profit. So as we are producing the duster, we will measure to determine how much cost are we incurring on the production of the duster. Then we compare that with the budget, with the standard, what we wanted to spend. Then we determine whether we are spending within it or outside it. If we are spending within it, then we continue. But if we are spending more than what we are supposed to spend, then we put in some remedial actions. That is cost control. But cost reduction is where we decide that, all right, we need to spend, if we want to produce this duster, it will cost us $5 per unit. But what do we do, or how can we reduce the average cost per unit? Then we can say, okay, let's buy the materials in bulk. So when we buy the materials in bulk, what do? We enjoy discounts. Once we enjoy discounts, we'll be able to what? Reduce the cost per unit of the duster. Remember, the quality of the duster is not compromised. We are just buying in bulk to get discounts. That doesn't mean we're going to use different wood, less quality wood to affect the quality of the product. So you've got to be careful that when you are doing cost reduction, the quality of the product and whatever decision you make does not affect the intended use of the product. I hope it makes sense. So that's the difference between the cost reduction and then the cost control. For instance, there are a couple of techniques that can help us in dealing with cost reduction. And these techniques include budgetary control, material control, labor control, and overhead control. All these are techniques that can be used in the reduction of what? Cost. So if we have labor control in place, what does that mean? It means that we ensure that there is no much idle time on our employees. Because if we are paying employees and they are not doing any job, then we have to make sure we supervise them so that they work as much as they are supposed to work. If they work more hours than they sit down doing nothing, chatting, doing social media or whatever it is, that means we're going to be producing more. All other things being equal, when we produce more, the average cost reduces in that case. Or overhead control, making sure that we don't spend money on things that we are not supposed to spend on. Or budgetary control, making sure that we put systems in place in order for us to budget, and people must be held accountable for the budget. All those things enhances cost reduction. So what are we saying? The first objective of cost accounting is cost ascertainment, where we are determining the cost of activity, a process, or an undertaking. And that is where job costing, batch costing, process costing, service costing, contract costing, and all of those costing things will be coming in there. However, when it comes to cost control, it is where we're comparing the actual against the budgeted to be able to find out whether we are within the budget or we are outside the budget or the budget. Then cost reduction is a process put in place, or the measures put in place by management in order to reduce the unit cost of products manufactured or services rendered without affecting the intended use of the product, without affecting the intended use of the product. I see some of you guys joining. Give us a thumbs up on the video when you join, and comment in the chat box any questions that you have for me. What topics would you want me to cover more on the channel? Put it in the chat box, and I'm going to be covering all of that for you. Nicole Williams, I see you. You are welcome to the stream. Patience Pintel. Patience, it's been a long time since I heard from you. I think this whole season we started, I've not heard from you. I hope you're doing well, Patience. Please, when are the live lectures days now? It's still Monday to Friday, 4:30 p.m. same time. But last week, Saturday, we had a session, so where I'll be doing Saturday sessions as well, that will be communicated. But Monday to Friday, 4:30 p.m. same time, as you know already. Abiodan Ogun Lege, forgive me if I don't mention your name right, okay? Abiodan, good evening. I hope you're doing well, Abiodan. Give us a thumbs up on the video when you join. Give us a thumbs up on the video when you join. So 3, next one, determination of selling price. Remember, when we produce a product or render a service, we will be ascertaining the cost. That's the first thing. But we are not here to make, or we are not charity organizations. We want to make some money. We want to maximize the wealth of the shareholders or maximize the returns on the shareholders' investments. So what do? We need to price at a profit. So cost accounting also helps the organization in the determination of the fixing of the selling price. So that if you know your cost is, let's say, $25 per unit, then you can say, okay, I will do a margin of 5% or a markup of 5%. Now, margin and markup is also something that you need to understand, and I'll be explaining these later on as we build our knowledge in that. Then the last one is policy making. Through cost accounting, various policies can be made by the organization, and I've given you a couple of the policies. For instance, if you realize that we are spending more than what we are supposed to spend, then we can put in place some measures to be able to reduce our cost to an acceptably low level, and also help the organization in order for us to achieve our objective as an organization. So these are what we refer to as the objectives of cost accounting. Any questions, put it in the chat box for me. Now, so if these are the objective of management accounting, there are a couple of limitations to them, though. I will not be going through that as much, though. But one thing is that no uniform procedure. There are no uniform procedure in cost accounting. So usually we could talk about differences between cost accounting and financial accounting, or differences between management accounting and financial reporting. Can we talk about that? So let's talk about some differences. Number one, there are no laid down procedures for cost accounting statements. However, with financial reporting statements, there is a generally accepted format for the preparation. For the income statement, for the statement of financial position, there is a generally accepted format based on IPSAS 1 for their preparation. 2, usually, management accounting is for internal purposes, management purposes, but the financial reports are usually for what? External purposes. So they are both internal, management will be using that, and also for what? External purposes in that case. Then, management accounting is not statutory. In other words, it is not by law that every company should have a management accountant. It is not compulsory, it's not statutory, it's optional. However, financial accounting is statutory, especially if you're a regulated institution or a listed company. So management accounting is optional. Financial reporting is what? Statutory, or it's compulsory. So there is this debate back in high school, this debate or question that states that since management accountants are optional and we are not, an entity is not under any legal obligation to employ a management accountant, then they aren't important for the organization. Hence, we just need to keep the financial accountant who will be able to do the job that we need, since it is by law. But you realize that if you make that decision and say, okay, because it is optional, I'm not going to do it, then it means you are losing out on how you can ascertain your cost. You are losing out on how you can control your cost. You are losing out how you can reduce your cost. You are losing out how you can price your product at a profit. And you are losing out on making various policy decisions about labor, about materials, about overheads, because these things cannot be done by the financial accountant, but can only be done by what? The management accountant. So these are a couple of differences that we can mention when it comes to dealing with the differences between cost accounting and financial accounting, or management accounting and what? Financial reporting. Hope it makes sense for you in relation to that. Then Sika Williams said, you look very excited today. Said, oh really, Sika Williams? You think I'm very excited today? Thank you very much. Maybe I'm excited because I'm doing in my live stream, right? This is one of the greatest things that I love doing all the time. I love doing all the time. Okay, so now that we've taken cost accounting out of the picture, let's go into the main subject we want to look at, right? Management accounting, and then let's get some breakdowns on management accounting. Now, I see some of you guys joining. Comment in the chat box any questions you have for me. What topics would you want me to look at today? What topics would you want us to cover on the channel? And then give us a thumbs up on the video. If you're enjoying the video, what are you waiting for? Just smash the like button. That way, the YouTube algorithm picks the video up and we'll be able to reach as many students as possible. Don't you want us to grow? We want to grow. We want to hit 10,000 subscribers before the end of the year, and that is possible. So help us, let's get there, right? Help us, let's get there. Nana Atrem said, yes, because my spirit told him what to teach today. Okay. All right, so Nana Atrem, your spirit said we should teach management accounting today. That is great. That is great. Okay, so let's look at management accounting and its things. Okay, so let's go. So what is management accounting? To define management accounting in general, we need to go to the people who regulate management accounting in the world, and that is CIMA, okay? The Chartered Institute of Management Accountants. So they are the institute globally regulating management accountants. So according to CIMA, what is management accounting? So according to CIMA, management accounting refers to the process of identification, measurement, it's a long definition, but we're going to go through, okay? The process of identification, measurement, accumulation, analysis, preparation, interpretation, and communication of information used by management to plan, evaluate, and control within an entity and to ensure appropriate use of and accountability for its resources. Let's take that again. Management accounting is the process of identification, measurement, accumulation, analysis, preparation, interpretation, and communication of information used by management to plan, evaluate, and control within an organization and to ensure appropriate use of and accountability of its resources. So per the CIMA's definition, this is CIMA official terminology, per the CIMA's definition, a lot of things happen there, but it's a process, okay? So it's a process of we identifying what are the elements of cost. 2, we measure the elements of cost. 3, we analyze the elements of cost. Okay, this is too high, this is too low. Let's do this, let's do that. We prepare and we interpret the information so that management can then use that information to evaluate, to plan, and also to make various control decisions so that they can determine whether materials or resources are being used the way they are intended to be used. Basically, from the definition, we can conclude that there are a number of objectives of management accounting. Now, technically, the objective of management accounting are just like the objective of cost accounting, just with an icing on it. So, for instance, the main objectives of management accounting include the following. 1, planning and policy formulation. Okay, planning and policy formulation. Planning and policy formulation. And I've explained this already under the costing system. So it helps management in planning, it helps management in making of various policies. What resources do we buy? How much do we pay labor? How long can labor work? What outputs can we produce? All those things are possible through management accounting. 2, assist in decision-making process. Assist in decision-making process. Assist in decision-making process. When management want to make policies, management want to make decisions, what do they need? They need an information. Who can provide them with that information? The management accountants. Through what? Management accounting. So management requires that information, and they cannot just rely on the final account, which is based on historical information alone, but also the management account, which is based on both historical as well as future, so they can decide what policies, what pricing strategies they can implement in order to maximize the welfare of the shareholders. Next one, controlling, and I've mentioned those already. Through management accounting, management is able to control cost, control how resources are utilized, and control how various activities are undertaken within an organization. Now, what do we mean by that? It means that through management accounting, we'll be able to set standards. Number one, once we set standards, we can compare the standard with the actual. Number 2, then we can determine whether we are working or we are not working. Then various remedial actions can be taken, or policies again can be made by management in order to again maximize the welfare of the shareholders. Remember, everything we are doing here is not just to make the organization successful, it's not just to make the organization popular, it's not just to make the organization to gain competitive advantage, but most importantly, to increase the welfare of the shareholders. So these are some of the objectives that we can talk about. In my slide, I have facilitate organizing, that is also there, and also motivate management in relation to what they do. So these are some of the objectives that we can talk about in relation to management accounting. Laila Adams, I see you. You are welcome to the stream. Mustafa Tunkara, I see you are welcome. It's like today you are late. Give us a thumbs up on the video when you join. Give us a thumbs up on the video when you join. So now that we have looked at the various things that we need to understand when it comes to the issue about management accounting, let's break down and let's look at the real deals. You ready? So let's look at the real deals now. So in the introduction, I defined what cost is. So we want to now break down and look at the real issues in management accounting. So far, we've just been just looking at the surface, just grinding on the surface, rubbing the surface, that kind of thing. Now we want to really get into the deeper understanding on what we need to look at when it comes to management accounting. So let's see. Cost. We define cost from the introduction as the amount of expenditure incurred in an activity, a process, or an undertaking. Okay? The amount of expenditure incurred in an activity, a process, or an undertaking. So when I say it cost me $200 to get to work, meaning that that is the expenditure I incur on that particular activity. When we say it cost us $5 to manufacture or make this duster, it means that that is the cost we incur, or that is the expenditure we incur on making or in making this duster. So that is what we mean by what? Cost, the amount of expenditure incurred on an activity, a process, or an undertaking. But you see, when it comes to cost, remember I told you this earlier, if you look at this duster, there are a lot of things in it making up the duster, right? We have the wood there, we have the carpets there, we have the glue there, we have the carpenter who did it, we have the one who did the finishing of the duster, and you can see there is a hole here. It could be an expert who did all of that. So even though we said, yes, we spent, how do we call it, $5 on each duster, we need to really break down that $5 and find out what is it covering, what is it including, and that is what leads us to what is called classification of cost. Classification of cost. Now, I want you to make sure you follow me here very well, because I'm going to drop a lot of bombs here that will really help you as you proceed. Now, like I said, many of the things that we'll be discussing here, if you're doing management accounting level 2, it will be like, yeah, it's a foundation area, and you may be shrugging and say that, yo, I know it already, that kind of thing. But like I tell you all the time, you've got to keep an open mind and make sure that you understand these things well, because what I'm about to do will set the tone for you to be able to excel in the management accounting examination. So you make sure you stay with me. Rose, I see you. You are welcome to the stream. So classification of cost. What is classification of cost? In a simple language, we say that classification of cost refers to the sorting of cost into particular groups based on certain features. Okay, the sorting out or grouping of cost into certain groups based on specific features. Now, there are various bases for the classification of cost. There are various bases for the classification of cost. We're going to be looking at a number of them, and then we proceed with our discussion. So, number one, classification of cost according to or by nature. Now, I want you to stay carefully with me here, because like I said, we're going to be doing a lot of discussions here. So stay with me and look at how I'm going to weave everything together for you so you can get it very simple. Now, classification of cost by nature refers to the classification of cost according to the elements of cost. Let's say that again. Classification of cost according to nature refers to the classification of cost according to the elements of cost. So if we are classifying costs according to the nature, then we are looking at what? The elements of cost. Okay, so what are the elements of cost? There are three elements of cost. We have the material cost, labor cost, and then expenses. Somebody will add cost to it, expenses, cost in there. You good? So classification of cost by nature means classification of cost according to the elements of cost. And there are three elements of cost: material cost, labor cost, and then expenses. Let's take them one after the other, and then let's boil them down. So what is material cost? Material simply refers to the ingredients or inputs used in the production process. So material cost refers to the cost of ingredients or inputs which undergo production in the production process. That is material cost. So the cost of the ingredient, the cost of the inputs, the cost of the raw material that goes into the production process is what we refer to as what? The material cost. Then we come to labor cost. Labor refers to the human effort used in the production of goods and services. Labor refers to the human effort used in the production of goods and services. So when we say labor cost, we are saying that labor cost refers to the cost of human effort used in the production of goods and services. The cost of human effort used in the production of goods and services. Then we come to the expenses. Expenses can be defined as all other costs apart from material costs and labor costs incurred in the production of goods and services. You good? All other costs incurred apart from material costs and labor costs in the production of goods and services. These are referred to as what? Expenses. So let's break it down. So back to our duster, we might making this duster and we're spending $5 per duster, right? So we want to break it down and find out what is it that makes up this $5, and that is where we're going to talking about what? The elements of cost. So number one, we're talking about the material. Okay, so if you look at this duster, what do we need to make this duster? Like we've mentioned earlier, we need a wood, okay? We need a carpet, we need a glue, okay? We need that. That is the materials we need. I don't know. Do we need any other thing? Maybe we need sandpaper or whatever it is. I don't know. Maybe we need sandpaper for the smoothing or whatever it is. Then we need the person who is going to be doing this duster, right? That is the labor. So maybe we need a carpenter. And the carpenter might not work alone. So his apprentice will be working with him. Okay? So his apprentice will be working with him. Now remember, when we go and buy this duster, okay, when we go and buy this materials, we're going to be putting it in vehicle. When a carpenter comes, he's going to use electricity, he's going to use machines, he's going to use equipment they are going to eat. So all of those other things that we incur, like the delivery costs, okay, other machines that they're going to be using, the food that they're going to be eating, all those things will also be a cost. What are we saying? The wood, carpet, glue, sandpaper are material costs. What we give to the carpenter and his apprentice, labor costs. Any other thing that we pay, like the delivery, machines, electricity, food, all that are classified as what? Expenses. We good? Now, we're going to break this down even much further in a moment, so stay with me carefully. I see a comment coming in. Nana Atrem said, "Sir, under classification of course, I want to ask if by type and by nature are the same." Yes, I think they are used interchangeably. I really haven't heard much about type, but I think they are used interchangeably to mean the same thing. Nature and type is the same thing. Yes, Nana Atrem is the same thing. Now, material cost can further be divided into two. Labor cost can further be divided into two. And then the expenses can further be divided into two. This is where it's going to get interesting. So these elements of cost, we've seen the material cost, we've seen labor cost, we've seen expenses, can further be divided into what is called direct cost and then indirect cost. You good? Direct cost and then indirect cost. So what do we mean here? We can have direct material cost, indirect material cost, direct labor cost, indirect labor cost, direct expenses, indirect expenses. Are you getting it? So these guys can further be categorized into direct cost and then indirect cost. Now, let's take their one-liner definitions and then we look at them. So before we come back to these things, let's look at the differences between direct cost and then indirect cost. You ready? Let's look at that. So differences between direct cost and indirect cost. We can put it in the tabular form, all right? So let's put direct cost on one side here. You good? And then let's put indirect cost here. So direct cost on one side, indirect cost on the other side. And I'm going to give you a couple of definitions of them about that. One, we say that direct cost can be traced or allocated to a particular cost center or cost unit. Direct cost can be traced or allocated to a particular cost center or cost unit, whilst indirect costs cannot be traced or allocated to a particular cost center or cost unit. Now, when we say something can be traced or allocated, it means that we can see the thing on the finished product and we can trace the thing on the finished product. So for instance, when we come to the material we're going to be using for this duster, we mentioned wood, we mentioned carpet, we mentioned glue, we mentioned sandpaper as part of the materials we're going to be using. Now, what can you see when you see this duster? You can see the wood, you can see the carpet, and probably you may see the glue because the glue is tied into it. Maybe let's just say what you can see. Let's say the glue is part of it. So that is going to be what? The direct material cost. Why? Because we can trace it, we can allocate it to the final product. But the sandpaper we used for the smoothing of the duster or of the wood here, well, we can see the effect of the sandpaper, like we can see the sandpaper here. So that becomes what? An indirect material cost. Are you getting the picture? So direct material cost or direct cost can be traced or allocated to a particular cost center or cost unit, whilst indirect cost cannot be traced or allocated to a particular cost center or cost unit. Again, if we look at the labor, look at it carefully. The carpenter, now the carpenter did this, so we can say that, okay, we paid the carpenter to do this duster. So the money we give to the carpenter becomes the direct labor cost, okay? The direct labor cost. However, the carpenter's apprentice runs a lot of errands for the carpenter. So he could be working on this job, working on another job, working on another job. So the money that we give to the apprentice or the cost we incurred in relation to the apprentice's job becomes what? An indirect labor cost. Why? Because the apprentice's job cannot be traced or allocated to the duster, but his boss, the carpenter, money can be traced to the duster. That is what we mean by traceability of cost. That's the first difference that we can talk about. Second is that summation of all direct costs gives prime cost. Summation of all direct costs gives prime cost. However, summation of all indirect costs gives what? Overheads. And we will come to that when I'm preparing the cost card with you as we continue with the discussion. So summation of all direct costs gives us prime cost. What does that mean? It means that prime cost equals direct material cost, direct labor cost, and then direct what? Expenses. So when we sum all these guys up, we get a prime cost. However, summation of all indirect costs gives us overheads, all right? So overheads will be indirect material cost, indirect labor cost, indirect expenses. These will give us the overheads. That is the second distinction that we can make for direct cost and indirect cost. Third, we can also say that direct costs form a greater percentage of the total cost. Direct costs form a greater percentage of the total cost, whilst indirect cost covers a less percentage of the total cost. Does it make sense? So with direct costs, because they can be traced, because they can be allocated, they form a greater percentage of what? The total cost we are incurring. So for instance, the wood, the carpet, the glue is huge. It's big. We incur a lot of cost on the wood, on the carpet, on the glue, but the sandpaper's cost, I mean, it's not that much. It's not that huge. So that is what? An indirect cost. So that is also another difference that we can talk about when dealing with or talking about the issue in relation to the difference. So number one, traceability. Direct costs can be traced, indirect costs cannot be traced. Number two, it's about their summation. That is, summation of all direct costs gives us prime cost, summation of all indirect costs gives us overheads. Number three, it's about their percentage of the total cost. Direct cost covers a greater percentage of the total cost. Indirect cost covers a less percentage of the total cost. Next is controllability. Controllability, that is, direct costs are controllable costs, whilst indirect costs are uncontrollable costs. Okay? Direct costs are controllable costs, whilst indirect costs are uncontrollable costs. Why is that? Because we can determine the kind of material we want to use. We can determine how much we want to pay for the carpet. We can determine the glue. But then when it comes to issues like electricity, delivery, and all those things, they are not that huge aspect of the of our cost. So we may not be able to control them that much in feeding of our control in the reduction of the cost that we are incurring. But the direct costs, because they are huge, because they are big, we're going to be looking at them and controlling them as well. So that is what you need to understand when it comes to some of the differences between the direct cost and then indirect cost. Let me know in the chat box if you have any questions for me. Let me know in the chat box if you have any questions for me. So you put it in the chat box for me, whatever questions that you have for me, put it in the chat box. Let me know as well what topics you want me to cover on the live stream. Then give us a thumbs up on the video if you're watching and you've not given us a thumbs up on the video. I mean, what are you waiting for, man? Give us a thumbs up on the video and let's get more engagement on the video. So what are we doing? What are we doing? Classification of cost according to nature, that is classifying the cost based on what? The elements of cost. What are the elements of cost? Material cost, labor cost, expenses. Okay, these costs can further be divided into direct cost and then indirect cost. What are the differences? Number one, traceability. Direct can be traced, indirect cannot be traced. Number two, summation. Direct adds up to prime cost, indirect adds up to overheads. Number three, controllability. Direct costs can be controlled, indirect costs are uncontrollable. Number four, it's about the percentage of each of the total cost. Direct costs cover a greater percentage of the total cost, whilst indirect cost covers a less percentage of the total cost. So it is based on this knowledge of how cost is classified according to the nature or the elements of cost that we have the cost sheet or the cost card. So let's look at the cost sheet or the cost card, which I've already give you a glimpse of. So cost sheets or the cost card, we're going to work with two cash columns probably, and then let's bring the cost items. So I'm going to do shortcuts, all right? So direct material cost will be brought, direct labor cost brought, direct expenses brought. Add all these up, that gives us what? Prime cost. We mentioned this earlier. Then after that, we're going to be bringing factory overheads. So we add factory overheads. Now the factory overheads, we're going to be doing workings for that. Chances are we're going to be doing workings for that. So the indirect material, indirect labor, indirect overheads, all of those things will be brought there. So we're going to be doing workings for the overheads, and I'm going to be explaining this, okay, how we do the workings. This is where we look at the overhead and absorption rates. So you're going to stay with me, and we're going to be looking at this in relation to that. So once we add that, we're going to be getting the production cost, if you want. But the sweet spot is that it doesn't end there. It doesn't end there. Why? Because there could be non-production overheads. So we're going to be adding non-production overheads. And chances are we're going to be doing some workings for that as well. And we're going to be looking at that later on. So we add it up. Now, non-production overheads here, I will talk about this because one of the classification of cost is classification of cost according to production, where we look at production cost and then non-production cost. So non-production cost relates to cost or costs that are not related to production, like selling and distribution, administration, finance. All these are non-production overheads. But when we are determining the total cost of a product, all these things must also be factored in the determination of the cost. So adding that up, that gives us total cost. Now, once we have the total cost, it doesn't end there. Because remember, one of the objectives of cost accounting or management accounting is the fixing of the price, right? So now that we have the total cost, what do? We bring in our profit. Remember, the profits can be a margin or a markup. And when we now add all that, we now get the selling price or quoted price. The selling price or quoted price. The selling price or quoted price. So that is what you need to understand. Now, margin and markup also, I'll be explaining the concept later on. So you stay with me and I'll be explaining everything we have here. Overheads, we'll be explaining it later on. That is the factory overheads. The production overheads, we'll be talking about it later on. Then the margin and markup thing, we'll be talking about it later on. So you make sure you stay with me as we continue with the discussion. I'm seeing some comments coming in here. Enyonam said, Nhyira, I'm now understanding, pa, thanks. Oh, okay, that is nice. That is nice, Priscilla. That is nice. Right, so that is the classification of cost according to nature. Nature. You see, just one thing, all right? And this is how we break all of them down. And that is how these things are knitted and weaved together in order for you to actually increase your chances of ultimately understanding it. So classification, of course, according to nature, we got to break down there and you see what direct is and what indirect are and how we can prepare the cost sheet. Any questions for me? Any questions for me in the chat box real quick? We're going to be continuing with this discussion tomorrow and look at the classification of costs according to behavior. Because of time constraints, we're going to be continuing, God willing, tomorrow. So if there are any questions, please put it in the chat box for me. And also make sure that you make a date for the part 2. That will be tomorrow as we continue with our discussion and look at the rest of the items here. And I can guarantee you, before I finish with the thing that I have titled Introduction to Management Accounting, you're going to be on top of management accounting, definitely, because like I say all the time, it's an interesting area. It's very easy, but quite technical, right? But if you understand the basic concepts well, you will be able to ultimately increase the chances of passing the exams and taking your life to the next level. So any questions for me real quick as I wrap up for today's discussion? Any questions for me real quick as we wrap up for today's discussion? Now, remember, what we are doing, it's based on the questions you guys ask and what you want me to cover more on the channel. So if there are anything that you want me to teach, any topics you want me to cover, like I say, don't give me give me topics. So once you give me the topics, we're going to be putting that together and we will be able to come in and then assist you to be able to prepare well for your examination. So this is where I'm going to conclude here today, and God willing, tomorrow we will look at the part 2 of the discussion. Now, Nhyira Premium is asking a question. Let's see that. Sir, I really enjoyed the lecture and understanding has been adhered. Your face looks more motivated and happy. Please, are you a Monday born like me? Thanks. God bless you more. All right, you're welcome and God bless you too. No, I'm not a Monday born. Nhyira Premium. I am actually a Saturday born, so I'm Kwame, Nana Kwame. I'm Nana Kwame, so I'm not Kojo. I'm Kwame. Kwame, right? Nana Kwame. So that is it. But I don't know why today you guys are saying that I look very exciting today. I don't know. Maybe because some money is coming for me, something like that. Maybe I'm going to get some money, you know. You know, sometimes when something is coming, your soul becomes happy all of a sudden. So maybe some money is coming, or maybe my wife is cooking for me. I'm lying. All right, so Mustafa said, thank you very much. Though I was late, but I got it clear. Thank you once again. It's always a pleasure, Mustafa. Robert Okumu said, what time will you be online? I would really like to know your timing so that I don't miss out. I'm watching from Kenya, bro. I like your work. It's always a pleasure. It's 4:30 p.m. or 16:30 GMT. 4:30 p.m. or 16:30 GMT. And you can join the stream. You can also follow me on Instagram because the meeting details and the time will be posted there, so that in case you forget, you will also be notified. Then subscribe to the channel and hit the bell notification icon. That way, when I go live, you will get a notification on your phone. Then you can jump on the live stream and then join. Patience said, then more money come. Yeah. More money, right? So more money, because I need more money. Ishola Peter said, thank you for the lecture. You are welcome. Sika Williams said, amen. Thank you very much. So that is it about that. And God willing, tomorrow we're going to be continuing with the discussion. Now, we currently running the lectures for the November 2020 examination. And so if you want to join the lecture and study under my mentorship online, wherever you are, you can join our Zoom sessions and study under my mentorship, get access to our online study portal for the full lecture videos, get access to my ebooks and question kits. You can study directly under my mentorship for the exams. So you can call 050-114-9296 and get access to study directly under my mentorship for your exam. So 050-114-9296, 050-114-9296. If outside Accra, outside Ghana, you add +233 to it. That is the country code, and you can reach out, and then let's see how I can assist you in order for you to prepare well for your examination, pass the exams, and most importantly, take your life to the next level. Because at the end of the day, that's all we want. Nana Atrem said, hey, I'm thinking Patience Pin still gonna drop you Momo. Oh, look at you. Nana Atrem, you are supposed to drop the Momo now. Why are you pushing it to Patience? Maybe you are supposed to drop the Momo. All right, so that is it. Thank you very much for joining the stream. It's always a pleasure coming your way. I love the community. I love your engagement, and I really love coming your way every time to assist you to be able to prepare well for your examination. So let's give some shout outs real quick to see some of the people who were in the stream today with us. Augustine, Amartin, Lily Daly, Christiana Esiedu, Irene was here, Nadia, Corey, Seth was here, Nana Trem, Charles, Sunday, Ahmed, Inshallah, Victor Mensa, Isaac, Baba Baturo, Nicole Williams, Patience, Abiodan, Sika Williams, Laila Adams, Mustafa, Rose, Enyonam, and everybody. Thank you very much. And I'll see you same time tomorrow, 4:30 p.m. or 16:30 GMT. And we're going to be continuing with the classification of cost. All right. And I'm again going to be dropping some vital nuggets that will help you to understand management accounting better. And most importantly, make sure you pass the exam. So thank you very much. And I'll see you same time tomorrow. Until we meet tomorrow, take care and stay blessed. Bye-bye.